Ladies and gentlemen, welcome to Destination Retirement with Robert Kuhn.
Time to get on board with Robert Kuhn from Kuhn Capital Partners. Retirement is a destination you've spent decades saving for. And what you do with those savings can make all the difference in the life you live once you get there. Income planning, wealth planning, tax planning. Destination Retirement with Robert Kuhn starts right now.
Welcome. I want to thank everybody for listening this weekend. My name is Robert Kuhn, president and founder of Kuhn Capital Partners, independent SEC registered investment advisory firm. And yes, we are a fiduciary. I want to thank everybody for listening. If this is your first time, I want to know, where have you been? If you are a repeat listener, we certainly thank you. My job is to make sure that we are really uncovering the financial advisory space, the investment management space, and always bringing to the table strategies that you can implement with us, without us. You can challenge your current advisor. If you manage the assets on your own, then you're going to have to look into the mirror. But as you know, if you've listened to this show for any length of time, you know that we are really going to try and just challenge kind of the status quo. And it's no more evident as to why, other than the last couple of weeks. And so we'll certainly get into that. So if you're catching this on the podcast, we do podcast every episode. So we're very, very happy with that. We do see the numbers. And guess what? Our website is finally going to be updated. So I know we've been talking an awful lot about that, because our job, I think, as advisors is to make sure that we're bringing to you strategies that you just simply may not understand or may not know, because advisors don't readily talk about them. That does not mean that they're not very important strategies. It's generally they're higher net worth strategies. And they're strategies that, unless your advisor kind of advises on significant wealth, they're strategies that you generally won't hear about. And here's the beauty about these strategies. These strategies now, the requirements, the minimums have dropped so great that for the banknotes, for example, which you know I often talk a lot about, and we'll certainly give you an update with all the volatility in the market. You know, the banknote minimum is $1,000. So it's for everybody. So if you want to have a conversation with us, if you want to stress test your current portfolio, if you want to have your financial plan updated or a financial plan done for you, if you want to do tax planning, albeit that we cannot provide tax advice, but the tax software that we use is as cutting edge as you're going to find. We've started to talk an awful lot more about our energy strategy on the radio and Bison 2, especially, taxes are probably on the mind of most individuals given what last week was. Tax planning is a year-round activity. It's not something that starts, last week of December. And I understand that happens a lot, but we're trying to change that. So when you look at tax planning, tax strategies, tax reduction, meaningful tax reduction, I often say that it is the most overlooked area of financial planning. And I'm talking about strategies that can reduce your taxable income by a targeted $80,000 per $100,000 invested. So every $100,000 invested, you get a targeted tax benefit of $80,000, and that's against active income, that's against passive income, and that is in our Bison 2 energy strategy, which is offered by a PPM. Those are our offering documents, so a private placement memorandum that has all of the risk disclosures in there. So certainly before you invest, you always have to make sure that you read that. But given the time of year, if you sold a building, if you have sold a property, if you're a high wage earner, and you want to greatly reduce your taxable income, certainly we need to have a conversation. I saw a statistic, heard a statistic rather this week on the, I can't remember where I heard it, but 75% of people want to reduce their taxable income. And it's so funny in this industry, even individuals where you really can't help them reduce their taxable income, everybody wants to reduce their taxable income, but yet the average advisor is just, if you're with a big brokerage firm or if you're with a big bank, I promise you their tax strategies, there almost is no tax strategies. Because they, tax loss harvesting or matching gains with losses, or some of these other funds that use leverage and try to give you big tax benefits, man, those are a nightmare to unwind. So if you want to talk about tax strategies, certainly we can do that. If you want to talk about the bank notes, certainly we can do that. If you want to talk about our hedge fund, certainly we can do that as well. So got a lot to get to this week, but anyways, easiest way to set up your initial call with my team is to reach out to 630-492-1912, 630-492-1912, 630-492-1912. So I really want to thank everybody who reaches out. I mean, it's just been an absolute amazing start to the year. We judge that based upon how many people reach out to us, not necessarily if you end up working with us or not, because we're really candidly not for everybody. I mean, we have a specialty, and our specialty and our niche is for individuals who don't want more of the same. They don't want cookie cutter. They don't want buy and hold. They don't want, strategies that, like the annuities that, we often talk a lot about that. I mean, if you listen to any radio show, any talk radio show on the weekend, it's full with paid advertising on the annuity space. They really, say that they're fiduciaries, say that they're financial planners, but yet 90% of their revenue comes from lifetime income annuities. And so we start to hit on that a lot, and, especially with those lifetime income annuities. I mean, if you look at what inflation is, and if you look at what inflation is probably going to do, and you look at the expectations, my goodness, you're just limiting your purchasing power in a way that, I'm certain nobody has walked you through it. So those are the things that we can help you with. If you're stuck in a lifetime income annuity that has not delivered anywhere near the performance that you were sold, which most haven't, we see the numbers, then certainly we can help you out there. 630-492-1912. But we'll start with the bank notes. The Phoenix Auto Callable notes. I mean, every single bank has a different name, but they're one of our most popular strategies. I think we did in new issuance. So that's, current, business on the books. And then as they get called, we redo them. So new issuance, I think in the last 14 months, we're pushing 80 million, which is not insignificant. The beautiful thing about these notes is the more you do in a single note, the better the return is, the better the yield is. And I think people, we're going to really start to lean into the bank notes because, as not cutting edge as they are, these maybe were cutting edge in the early 2000s, when I was doing them, but they're just not cutting edge today. But when you can look at an investor and say, the notes are still pricing in the 12 to 14% range, and you get that as long as the index is, you get that in monthly payments. So let's just say it's a 12% note backed by, JP Morgan, for example. Every month, they'll simply look at the indexes from when the note first traded, and as long as the indexes aren't down 30%, you get paid that 1% for that month. And think about that. The markets could be down. The worst index that note tracks could be down 29.99%. But on that monthly valuation date, if the indexes aren't down more than 30, you're paid. So it gravitates to investors that want to get out of annuities, lifetime income annuities, because, we can do some spreadsheeting and we can really look and see what the surrender charges are. We can use some hypothetical, notes as far as, what the notes are paying. And let's just assume, we miss a few coupon payments because the markets crash or something like that. Those are the things that we can do and that we do often. So if you're in that, certainly we can work at seeing if the spreadsheet makes sense and give you something to think about. Also, it's kind of an alternative to fixed income. I mean, if you look at the bond space, we're in the worst drawdown still in history. And you can, advisors, lazy advisors, traditional advisors who have already, quote unquote, made it, they don't like to do new things. And I would consider that we have also made it as well. But we try to stay at the very, cutting edge of, and I use that word cutting edge because banknotes are not cutting edge. But we try to stay at the forefront of ways for our clients to make money in all market environments. And when you look at the bond market, you can do the research yourself. Just pull up AGG I'm not picking on AGG. It's the index of the aggregate bond index. And you look at what the 10-year performance number is. I mean, you're greatly, greatly underperforming inflation. And it's like, why do advisors still, push that? And they push it because it's easy. They push it because they don't have to do any education to individual investors. And that's great for us because, we get those clients. And so people are using the banknote still to replace bonds, to get out of lifetime income annuities, and really as an equity hedge. And, the markets, they may be priced to perfection. A lot of individuals, myself included, don't understand how we just continuously hit new high after new high after new high with all of the geopolitical mess that, we are all facing or the world is facing. And it seems like every day, if you look at it 1 minute, somebody says one thing and then, the next minute somebody contradicts, what was first said, and the third minute, another person contradicts what the first, two people said. So very, very challenging and very, very kind of stressful. And if you're in your, 50s, 60s, 70s, and 80s, time on the investment side, a lot of times isn't, your friend anymore, because if you bought Microsoft in 2000, and this really goes to the buy and hold investors and the buy and hold advisors that preach that you just have to buy something and never touch it. And if that's the way you want your money managed, that's perfectly fine. But I just have to understand, or I can't understand rather, why you are paying an advisor's fee for that. I mean, you could call our firm and pay us, $5,000 financial planning fee, once a year, and we'll give you an asset allocation that you can set it and forget it. And I promise you, it's not the way that I would manage money, but it's, certainly, you look at fee drag, and so many of these investment advisors, mark up stuff as proprietary, but yet they don't talk about performance because they're greatly underperforming the index, because their strategies are there to track an index, and then you have that fee drag. So, again, in the banknotes, we're very, very pleased with what we've been able to do, certainly here in Chicago. I don't know if we're certainly not the largest, but we're probably, I don't know, for an individual group, not a firm that has hundreds of advisors, but for an individual group, I would say that we're probably, just in the top five. So that's not nothing. And it's something that we're very, very passionate about. So 630-492-1912, 630-492-1912. Next, after the break, we'll talk more about what's going on in the market. We'll talk about the energy fund, and then we'll close the next segment with Alpha, which is our hedge fund. 630-492-1912. More after the break.
Retirement is the destination, and getting you there is what we do. Whatever comes your way, we've got you covered. We're dedicated to providing investment management and strategic wealth planning that are right for you. Simply put, we strive to be our clients' trusted advisor. We've been helping families, business owners, and entrepreneurs just like you get ready for retirement for over 28 years. To talk with Robert Kuhn and his team, give him a call at 630-492-1912 or find out more at kuhncp.com.
Planning for retirement is kind of like planning for a trip of a lifetime. First you save and plan every detail. Then comes a day you've looked forward to for so long. Preparation is the foundation for successful travel and retirement. At Kuhn Capital Partners, we believe that foundation is a financially secure and tax-efficient plan that seeks to protect your needs now while looking to the future. Reach out to Robert Kuhn at 630-429-1912 and visit our website, kuhncp.com.
You're listening to Destination Retirement with Robert Kuhn. Still to come on today's show.
And so when we craft portfolios, obviously it all starts with the financial plan. I mean, our financial planning, and Brian, if you've met with Brian, you know just how amazing he is. And Alexa in her planning, it's very thorough, very unique, and very different from the cookie cutter plans that you're going to get from most individuals. We're going to actually run out your RMDs to age 95. And if you have a $1 million or multi-million-dollar IRA, I don't think you fully recognize the tax shock that you're going to have, or you're going to have rather, when you start to have to take out your RMDs. And we will look to plan how can we reduce those. And we will look at Roth conversions. Most people think I make too much money for a Roth. I don't qualify for a Roth. If I convert an IRA to a Roth, we're going to have to pay too much in taxes. All very fair, and accurate statements in many ways. But what if you had an energy strategy that could mitigate some or all of that conversion tax?
That and more still to come on Destination Retirement with Robert Kuhn. Retirement looks different for everyone. Will you be sitting on your porch taking in the view, or will your porch be disappearing in the rearview mirror? Whatever your retirement dream, making it a reality starts with a plan. Robert Kuhn at Kuhn Capital Partners can help you create a financially secure and tax-efficient plan that is tailored to you. After all, you deserve to live your dream. Call 630-492-1912 and start planning for tomorrow and every day after. 630-492-1912 and visit us online at KuhnCP.com.
Welcome back. You're listening to Destination Retirement. My name is Robert Kuhn, president and founder of Kuhn Capital Partners, independent SEC-registered investment advisory firm. And yes, we are a fiduciary headquartered in Oak Brook. We look at the mall. So if you are in the area, you do not need an appointment. You would probably be smart to have an appointment if you want to get in and meet with somebody on my team. But if you're in the area and you don't mind waiting a few minutes, just stop in. Our office is great. I think it's we'll take you down memory lane with all of our sports memorabilia. So if you're like me, 51, and you go back to kind of the 80s and 90s, obviously Chicago sports was phenomenal. So a lot of jerseys, a lot of signed jerseys, a lot of framed jerseys, all framed jerseys, all signed jerseys. So stop in. We're on the 5th floor. Just Google Fidelity and go to that building, and we are on the 5th floor. Now, you could stop in and see Fidelity too, and I have no issues with that, because when we talk with individuals and we talk about what we do and how we structure portfolios, there's very, very little comparison to what we're doing versus what the broader market is doing. And I don't want to say that we're the only ones doing it. But I do not know of anybody that's doing the banknotes and also doing the energy strategy together. So that definitely does put us in a category of our own. So 630-492-1912, 630-492-1912, because the markets, they can drop fast. And I didn't give you the statistic that I wanted to give you last segment. But I guess I'm a senior now, being over 50, so I do have these senior moments. But Microsoft, if you had bought Microsoft in 2000, it took you 14 years to just get back to even. So when you're sitting with your current advisor and they're talking about time in the market, don't worry about it, ultimately it's going to come back, those are all very, very true statements. Now, as an advisor, I would have to ask, why am I using you? Because I can certainly do that on my own. I can go meet with somebody at Schwab or Fidelity or at Vanguard and not pay your fee. But I would have to ask myself, what's the purpose of you? And our purpose as an advisory firm is to always make sure that, we have something inside of the portfolio that we believe can deliver in all markets, i.e. the banknotes, right? I mean, the banknotes, offered by the biggest banks, JP, Citi, Bank of America, Goldman, UBS, Morgan Stanley, et cetera. And, those are still pricing north of 12% annually with monthly payments, as long as the indexes don't go down 30%. Now, those are a prospectus item. And so I encourage anybody who is even thinking about them, just call us and we'll send you the most recent prospectus. The prospectus shows everything. And if you don't believe me, I hear a lot of it's too good to be true. Well, go fight with JP Morgan, go fight with Citigroup, go fight with Bank of America, go fight with Goldman Sachs. I mean, do you think that they're going to, put something out that's not? It's not too good to be true. It's just unique and I guess different. So 630-492-1912. But yeah, if you bought Microsoft, it took you 14 years to get back to even. So use that statistic if you have an advisor, or if you're managing the money on your own. You really need to look in the mirror. And you really have to ask yourself, what percentage of your portfolio would actually do well if the markets didn't do well. And so when we craft portfolios, obviously it all starts with the financial plan. I mean, our financial planning and Brian, if you've met with Brian, you know just how amazing he is. And Alexa in her planning, it's very thorough, very unique, and very different from the cookie cutter plans that you're going to get from most individuals. We're going to actually run out your RMDs to age 95. And if you have a $1 million or multi-million-dollar IRA, I don't think you fully recognize the tax shock that you're going to have, or you're going to have, rather, when you start to have to take out your RMDs. And we will look to plan how can we reduce those. And we will look at Roth conversions. Most people think I make too much money for a Roth. I don't qualify for a Roth. If I convert an IRA to a Roth, we're going to have to pay too much in taxes. All very fair, and accurate statements in many ways. But what if you had an energy strategy that could mitigate some or all of that conversion tax? So let's say you have a $2 to $3 million IRA, and let's say it's going to take you 5 years or 6 years or whatever to convert and get it over to a Roth, where you're never going to pay taxes on that money again. And one of the biggest things about the Roth, if you don't want to spend every penny that you have, and you have any interest in leaving money to your beneficiaries, they have 10 years from the date of your death to let that money grow tax-free. 10 years. I mean, think about that. So if you have a larger IRA and you're going to do a $500,000 conversion, that's a $500,000 of additional income. Well, what if you took some money outside of that, taxable money, and invested it in the energy strategy that, say, gave you an 80% tax benefit? So let's just say, hypothetically, you put $500,000 in, and I don't know if that's an amount that you should or you shouldn't put in, but we're just doing some math here. I mean, so you just simply take 80% because that's what we target. Generally, it's been higher, but 80% times 500,000. Well, you can do the math there, and then if you have an additional $500,000 of taxable income, well, we were just able to convert your $500,000 of your IRA and greatly reduce that additional income tax. Now, a couple things: we can't provide tax advice, so it's obviously for educational purposes only. We always encourage you, before you make any investment-related decision that's simply based on taxes, to always bring in your tax professional. We talk to them, I don't want to say on a daily basis, but we are in, with CPAs constantly. But those are the things that is going to, you're looking and, you're working with an advisory firm that is just kind of next level. And that's what we believe ourselves to be, next level. And our numbers bear that out. The numbers of people that reach out from the radio bear it out. The number of new assets that we're bringing in bear it out. And so, we're just going to keep doing what we do, what we do, but we're going to really start to lean into our competitive strengths. And our competitive strengths are financial planning, Roth conversions, while mitigating, the taxes, the bank notes, the energy strategy, especially with the current energy market. I mean, everybody's talking about oil. And here's the beautiful thing about, our oil and gas fund, it's Bison 2, is that the bulk of the assets currently in the fund, which are it's a $50 million fund. I think we're, probably 20, 21, 22, somewhere in that range of assets that we've acquired. Those are already acquired at much lower oil prices. And so when anybody hears oil and gas, the first question that everybody thinks is like, well, is it going to be a dry hole? Well, that's like speculation. That's like, Jim Bob going out in East Texas, and nothing wrong with Jim Bob and nothing wrong with the East Texas, but, having no idea if oil's in the ground and, trying to, strike oil for a lack of a better phrase. That is 100% the opposite of what we do. I mean, we have an advisory practice, right? We manage a lot of money, and it continues to grow at a very, very rapid pace. And so when it comes to oil and gas, 100% of our assets are in the Permian Basin. Just do a quick Google search, Permian Basin. And the bulk of our assets, if not every single asset, are with operators. We don't do the drilling. We let the Exxon, Chevrons, Conocos, Matadors, Mewborns, BPs, Exxon, the big boys, call it that, do the drilling. We're just buying pieces of their deal. So we have a very diversified fund. It's rather simplistic. We buy assets that come with land, that come with great production, near term or in the future, package the deal up within 5 years and sell it to a fund that wants to ride out that income for the next 20 to 30 years. So I would say it's anything but speculation or guesswork. It's really no guesswork, because when you have these big companies putting in hundreds of $1 million into projects, I mean, they generally are right and right all the time. So here in the Midwest, I know it's certainly new. But you know what? We started talking a lot more about it on the radio, and people are utilizing it and really the use case for that is high wage earners, of course. If you're a doctor, physician, surgeon, whatever, you make $500,000, $1 million, $2 million, $3 million, $5 million a year. Well, obviously, you have a tax, problem, which is, let that be the worst problem that you have, right? We love that. A lot of concentrated stock positions that we meet with. People had bought, the Mag 7 at very cheap prices, and now they don't want to get out of them because of what's going on. They don't want to pay the taxes. If you sold a business, sold a property, you had some sort of a liquidity event, you understand that taxes are going to greatly affect the net ROI of that investment, and so this is a great way to look at it and to offset some of those taxes. Again, we're not tax professionals. We don't provide tax advice, but these are tax benefits that are very black and white. So bring your CPA in. We have no problems having that conversation with him, get the professional to sign off on it, and away we go. So 630-492-1912, 630-492-1912. Bison Alpha in this market, so that's our internal hedge fund. We're trying to get it to 100 million as quick as we can. It's basically how really the thought process is exactly how we would manage our personal assets, and to make it easy, we rolled it into a fund and created a fund for it. So it's a good complement to just traditional equities, and we're very, very happy with kind of the direction of the fund and how it's going. It's certainly been hit with equities, but the nice thing about this fund is we can trade around, our current core positions. There's been a tremendous amount of money in the option space to make money with all of this volatility that we've seen, especially in oil. So the nice thing, again, is flexibility. It's real active management. It's not buy and hold. It's not a cloned fund that is a closet index fund that is marketed as something super proprietary, but yet you just track the market up and down. $2.1 million net worth, not including your primary residence to get into that fund, or you can have $1 million with the firm, and you have access to that. Those aren't our rules; those are the SEC's rules, and we have to obviously abide by that. So, really great satellite strategy that we're thinking is becoming more and more of a core strategy. So, with the volatility in the market, obviously, being able to, and I don't want to on a radio talk about some of the trades that we've had, because generally, people are only going to tell you the good ones, right? We're going to share with you the good ones, and there's just been a lot of good ones lately, but we'll share with you kind of, even if our core positions are down because of the market, which, the market's now coming back, how having cash available and utilizing options in a volatile asset class can really help minimize those losses with some of the money that and some of the gains that you can certainly have with that. So 630-492-1912, 630-492-1912. More after the break.
Retirement is the destination, and getting you there is what we do. Whatever comes your way, we've got you covered. We're dedicated to providing investment management and strategic wealth planning that are right for you. Simply put, we strive to be our clients' trusted advisor. We've been helping families, business owners, and entrepreneurs just like you get ready for retirement for over 28 years. To talk with Robert Kuhn and his team, give them a call at 630-492-1912 or find out more at KuhnCP.com.
Planning for retirement is kind of like planning for a trip of a lifetime. First you save and plan every detail. Then comes a day you've looked forward to for so long. Preparation is the foundation for successful travel and retirement. At Kuhn Capital Partners, we believe that foundation is a financially secure and tax-efficient plan that seeks to protect your needs now while looking to the future. Reach out to Robert Kuhn at 630-429-1912 and visit our website, kuhncp.com.
You're listening to Destination Retirement with Robert Kuhn. Still to come on today's show.
Our job is to try to make sure that we have something inside of your portfolio that can always do well, regardless of what's going on in the market. That doesn't mean it will do well, but the banknotes, for example, we have a 30% buffer before we don't get paid our monthly coupon. So if you have a 12% note backed by JP Morgan, as long as those indexes that note is tracking, the date the note trades, as long as they're not down 30%, you're getting your monthly coupon.
That and more still to come on Destination Retirement with Robert Kuhn. Retirement looks different for everyone. Will you be sitting on your porch taking in the view, or will your porch be disappearing in the rearview mirror? Whatever your retirement dream, making it a reality starts with a plan. Robert Kuhn at Kuhn Capital Partners can help you create a financially secure and tax-efficient plan that is tailored to you. After all, you deserve to live your dream. Call 630-492-1912 and start planning for tomorrow and every day after. 630-492-1912 and visit us online at kuhncp.com.
Welcome back. You're listening to Destination Retirement. My name is Robert Kuhn, president and founder of Kuhn Capital Partners, independent SEC-registered investment advisory firm. Yes, we are a fiduciary headquartered in Oak Brook. We do have a national client base. The beautiful thing about technology, Zoom, Google Meets, Teams, whatever you use, is we don't want to let individuals' investment advice be determined by where they live geographically, because we're all just, a computer screen away. And so if you are catching this driving through Chicago, if you're a client, or if you have listened to the show and you have family, friends, colleagues outside of Chicago, just please forward the link on to them so they can listen to the show and get a feel for kind of what it is that we do, my philosophy, kind of how we manage money. Again, our job is to try to make sure that we have something inside of your portfolio that can always do well, regardless of what's going on in the market. That doesn't mean it will do well, but the banknotes, for example, we have a 30% buffer before we don't get paid our monthly coupon. So if you have a 12% note backed by JP Morgan, as long as those indexes that note is tracking, it's literally that simple, the date the note trades, it locks in the three indexes. Then once a month for the first 6 months, all they do is look at those indexes, and from the date of trade, as long as they're not down 30%, you're getting your monthly coupon. So think about how that could offset your equity volatility. Think about how that could give you probably much greater return than just your average bond funds or bond strategies. And really gives you peace at night, sleep at night. And that to me is what most individuals are really looking for. We have a great client of ours, nuclear engineer, certainly can't name names, but is a great client. He's become a really good friend and is putting some money into our energy strategy. And it was, I need to be able to sleep at night, so can you show me some production numbers? And it's like, I don't think he thought we would take offense to this, but this is this is your money. This isn't a trust me business. This is a show me business. And that's the beautiful thing that I think that we do as good or better than most is educate, number one, but the level of transparency. The level of transparency that we deliver is going to be, at least we target it to be second to none. We want everybody to know the ifs, the ands, the buts, the whats, the coulds, the shoulds. We want you to know how much we're getting paid. We want you to know radical transparency, because that to me is the really the foundation of a relationship that's going to last multiple generations. We're not in it to rent you. We don't want to tell you so many of these guys on the radio, especially selling these lifetime income annuities, they give you these just ridiculous promises. And I know for a fact, because many of the people that have already talked with them or worked with them come to us to ask us to fix what they messed up. So it's, it's just, I just get somewhat on my soapbox sometimes with these lifetime income annuities because, people will say, well, you're the annuity haters. You guys don't like annuities. And that just couldn't be further from the truth. We do not like income annuities for most individuals, because what you have to understand with these lifetime income annuities, first of all, let's uncover the bonuses. Do you think a company is going to give you 20 to 30% free money? I mean, come on. I mean, who's going to do that, right? Generally, well, two things. One, it's for a income number base, which you'll never really get. And if it is a real principal bonus, your options that you have to invest in have a governor on the growth. So albeit they're already low, if they're giving you a bonus, they're even lower. And so many of these insurance agents are using, these bonuses to get these people out of other annuities to cover those surrender charges. And they don't just understand and articulate just exactly, what what the client is buying. And so you have to understand with these lifetime income annuities that I think there is a place for them. I think the place is for somebody who doesn't have a significant amount of assets, and that number is going to be different, obviously, for everybody. But under 100,000, maybe 150,000, 200,000, maybe it's the best darn strategy in the world for those folks, right? That they're going to get that kind of, let's just call it what it is, Social Security-like payments. But the big problem with Social Security is lack of cost of living adjustments, and so when you look at how these annuities are sold today, if an annuity is being sold on an illustration, meaning they show you an illustration, you have to understand that that illustration is not worth the paper it's written on, because the performance of those numbers, they're back tested. Most of the indexes that these individual advisors are showing you, they just look and they say, what are the best indexes that have given the best performance, back tested, and that's going to show the highest income number, that's going to show the most unrealistic potential growth, but it looks so good that they show you that, and they don't really tell you, well, this is new. It's only been around for a year or two. The actual performance in the year or two that it's been live has actually been horrible, and they just get you to buy it, and they get a 6, 7, 8, 9, 10% commission, and they're on to the next. And so with this lifetime income stuff, it's you're only taking your own money out of that account until it goes to zero. That is all you're doing. You're only taking your own money out of that account until it goes to zero. And to show any kind of realistic number, a lot of people will say, well, wait 10 years. It's like, what? I mean, okay, let's wait 10 years on this index annuity, or let's compare owning a banknote for 10 years that's pricing, north of 12%. I mean, you do a side-by-side on this. I mean, in my opinion, there's absolutely no comparison, but I digress. But when you have the lifetime income annuities and you are just taking your own money out, you do not get into the insurance company's pockets until that account goes to zero. When that account goes to zero, then yes, the insurance company is paying you with their money. I have to think actuarially that they know more times than not, and I would love to see a statistic on how many people actually accounts have gone to zero. I don't know of a single one. That have actually gone to zero where there's actually been a benefit. And I think the industry, has to start putting that in writing. I really believe that. And I don't know if I'm going to try to lead that, to champion that, but that to me would show you what real value this annuity is bringing. So, and then, these income, payments, they govern the growth, they govern how much you can take out. And then you have a lot of people who are unhappy. So you have these advisors that show just unrealistic stuff. And then ultimately those people many times come to us. So, that's something that, we haven't really talked a whole lot about, but there are answers there. There are ways that you can get out. And even if they incur surrender charges, sometimes it's okay to pay a surrender charge and get out of it and then get something that's, ultimately, has more of a growth characteristic, like i.e. the banknotes. I mean, those to me are just no-brainers. But going back to what even got me down this rabbit hole was, people say, well, you don't like annuities. Well, that couldn't be further from the truth, because the 5-year annuity we use is a pure what we call growth annuity. No income, no nothing. It's so simple. You don't need, I can explain it to you on a napkin. You get a percentage of the S&P at a cap. You have 100% principal protection, no losses. And when I say no losses, it's always backed by the credit, of the company. It's not FDIC insured, not backed by any government agency. But any year the S&P's negative, your return zero. And any year the S&P is positive, currently the caps are 10.5%-ish. That's what we're seeing. So you get the first 10.5% of the S&P. Now, you don't get dividends, so you have to understand that. It's price movement, but whatever the dividend yield is of the S&P, now almost 1.75. You're giving that up. But again, for the trade-off to not lose money, a lot of people will take that. And then when you get a gain, that gain's locked in. That gain's locked in, never, ever to go back. So again, you can't say that we don't like annuities, because we think the 5-year annuity for a lot of people who want to hedge equities, who are ultra conservative, who want something higher than what CD rates are potentially paying, that have 5-year money that they can set aside and not have to touch, even though you can take withdrawals each year. Some are 5%, some are 10%. But in my opinion, that is a much more beneficial investment to the investor. Now, it doesn't pay us the big commissions. Now, it still pays us a commission, and advisors will say, well, you're not paying it. I can't stand when an advisor says you, the client, are not paying it. I mean, I guess in theory, if you put in $100,000 goes to work for you, but you are paying it somewhere, somehow, some way. And generally, it's with metered growth. And but the 5 years generally pay the least versus, the 10 and 14 years obviously pay the advisor, substantially more. So, just didn't really expect to go down kind of that rabbit hole, this show. But if you're in and you feel stuck in an annuity and it's not doing what you thought, let's have a conversation. Let's see if we can craft something to come up or get out of that over a period of time. Maybe it's immediate, maybe it's not, but we can certainly spreadsheet some stuff with the bank notes and use some assumptions on that you're comfortable with and see if it makes sense. So 630-492-1912, 630-492-1912. More after the break.
Retirement is the destination, and getting you there is what we do. Whatever comes your way, we've got you covered. We're dedicated to providing investment management and strategic wealth planning that are right for you. Simply put, we strive to be our clients' trusted advisor. We've been helping families, business owners, and entrepreneurs just like you get ready for retirement for over 28 years. To talk with Robert Kuhn and his team, give him a call at 630-492-1912 or find out more at KuhnCP.com.
Planning for retirement is kind of like planning for a trip of a lifetime. First you save and plan every detail. Then comes a day you've looked forward to for so long. Preparation is the foundation for successful travel and retirement. At Kuhn Capital Partners, we believe that foundation is a financially secure and tax-efficient plan that seeks to protect your needs now while looking to the future. Reach out to Robert Kuhn at 630-429-1912 and visit our website, KuhnCP.com.
Retirement looks different for everyone. Will you be sitting on your porch taking in the view, or will your porch be disappearing in the rearview mirror? Whatever your retirement dream, making it a reality starts with a plan. Robert Kuhn at Kuhn Capital Partners can help you create a financially secure and tax-efficient plan that is tailored to you. After all, you deserve to live your dream. Call 630-492-1912 and start planning for tomorrow and every day after. 630-492-1912 and visit us online at KuhnCP.com.
Welcome back. You're listening to Destination Retirement. My name is Robert Kuhn, president and founder of Kuhn Capital Partners, president of Bison Natural Resources, managing general partner of KCP Energy, Bison 2, managing general partner of Bison Alpha. So we got a lot of things going on here, and I like that. I like that a lot. And we want to make sure that, when you look at us as an advisory firm, we have a lot of individuals, not a lot actually, I'd say probably not many now that I think about it, that will meet with us and then say, we want to interview some other advisors. And we always encourage that, because we think after you meet with us and then you meet with somebody else, it becomes pretty evident who is more structured, who is more true diversified, who has more strategies that can do well when the markets potentially don't do well. Again, doesn't mean they will, but the bank notes, I mean, you in essence have a 30% buffer on the downside, backed by a JP Morgan, Citigroup, Bank of America, Morgan Stanley, UBS, et cetera. to get, currently still double digits. So we encourage that. We encourage people to, meet with other advisors, and, especially in the advisory space of, I think there's a lost, kind of in that $3 to $20 million area. It's kind of a no man's land for those types of individuals, because you're at the very low end of a potential family office at 15 million, very, very low end. Maybe it's a multifamily office, but it's certainly, generally not a family office. And in the, the $2 to $3 million range, you're still generally, at least what we see, you're still getting investment advice from advisors that, you might as well have had $100,000, and they're going to put the same portfolio together for that investor as they do, somebody like yourselves who have multiple, millions of dollars. And now one of the things that we pride ourselves on at Kuhn Capital Partners is we don't really care how much money you have. We work with clients. I mean, there's literally clients that have $20,000 with us, and we just love to educate. And you never know who that $20,000 investor knows, right? But if you treat them and you bring all of the intellectual capital and all of the kind of firepower that we have, now those types of clients generally can't take advantage of all of our strategies, but when we still do the plan, we still do the tax analysis, we still, look at, just options for them. You just never know who, those individuals know. But what we have found over and over again is for clients, that don't necessarily specialize in the, $2 to $15 million space like we do, that you're just getting very, very basic cookie cutter strategies. And that's just not good enough, because I think, everybody should have the best plan in place. But when you do, it's not our rules, but the more money you have, the more access to different strategies that you do have available to you. Bison Alpha, our hedge fund, for example. I mean, that is a strategy that I really encourage everybody, even if you only utilize us for Bison, the energy fund, the hedge fund, and maybe the bank notes. And then you keep your core stuff with your current advisor, or you're managing your core on your own. I mean, you are enhancing your portfolio, and at least my belief, greatly just by doing that. Now, most people, I don't know what most is, I don't have a definitive number, but it's the lion's share of investors that we work with, certainly, we manage 100% of their money. But if you have large legacy positions and, you've been in, you put in, 1,000 shares of NVIDIA, 3 years ago, and it's now a massive percentage of your portfolio, and you don't want to, make that change. Well, we won't bill you on that asset, but you can still have it with us, but we won't bill you on it until we're actually managing it. But we'll still do the analysis. We'll still give you a tax strategy on how to mitigate, if you want to scale out of some of those positions, we'll still give you, an idea of how to do that. And a lot of it will entail Bison too. And I just can't stress enough, if you're a high wage earner, if you sold a business, I mean, we talked with a guy end of last year, he had $100 million capital gain. I mean, that's a pretty nice exit of a company, a rather large company. And, obviously what always draws people to Bison 2, the energy strategy, is the tax benefits. But we don't look at it that way. It's so much more than a tax play. We think it's a total return play. I actually am more excited about the total return of the investment than actually the tax benefits you get. The tax benefits are just kind of icing on the cake. And for individuals here in the Midwest, they don't readily understand what, the tax benefits afforded to you in the energy space. And so we're really trying to change that. Again, it comes with education. So look for more private dinners at our office. We'll probably do our first one in May. We'll have a dinner and we'll have a lunch. 10 people to qualify, minimum net worth or minimum investable assets of at least $5 million. And taxes need to be front and center in your mind. And we don't care if you're working with another advisor. We don't care if you're managing the money on your own, but minimum investment to get into the event is $5 million. We're doing it at our office. We don't want to, wine and dine you. I mean, let us wine and dine you with education and wine and dine you with ways to, potentially greatly reduce your taxable income. So more to come on that. But in May, we'll do one during the day, and then we'll do one in the evening. And if our conference room, as beautiful as it is, comfortably will fit 10 people. We have a massive TV smart board, whatever they call those things, but you'll definitely be impressed with that. And we'll kind of walk through those, those tax strategies, and have a CPA there as well to let them do what they do. So if you want to get on that list, again, minimum $5 million investable, 630-492-1912. 630-492-1912, but you can just tell Paige or whoever answers the phone that you want to be invited to our tax event. Again, we're doing it in the office. We're not going to buy a steak. We're not going to, get you in a big room. I mean, this is very handpicked, very, we're coming to learn here, and we're coming to really, figure out, can we, reduce your taxable income? This is for, the $5 to $50 million investor that really wants to learn about ways to reduce their taxable income in the energy space. So really excited about that, 630-492-1912. So just tell Paige. We haven't even named the dinners yet or the day. We'll come up with some name, but it's but you can just tell them the tax event, and we'll get the agenda, which isn't even completed yet, and we don't even have the darn dates. But here's what we're going to do: is we'll certainly have food and coffee, and it'll be great, and we'll have people that serve us, and we will really get after it as far as education on taxes. So 630-492-1912. Markets, we could go on about the markets, by the time, it's just, I don't know, by the time we started this radio show from now, it's probably changed, flip-flop 15 times. So you have to own best in breed. You have to have a hedge. You have to have strategies in place that, can go anywhere, strategies that have the flexibility to trade around core positions, to really try to get outsized returns in the option market, to mitigate some of the traditional stuff that's down. You want non-correlated assets. You look at the Bison strategy. Yes, taxes, always peak interest, but the returns, I think are we really, they're just targeted, right? But we can run out all of our models, and we can run out, at $60 oil, what we think the returns will do. And you can only imagine what they'll do at 90 in theory, right? It's all theory until there's an exit. But the nice thing about the Bison strategy is we do have an exit, and we really built what wasn't out there. We looked, we searched, we did the due diligence. The nice thing about our fund is it's all third party. Charles Schwab is the custodian. That doesn't mean that they like us, tell us that we're good or we're bad. We've just met that criteria, the due diligence, to get on their custodial platform, but it is all third party. It checks every box that you want to be checked, audited on an annual basis, third-party accounting, third-party due diligence, third-party everything. So again, this is, unless you want to write a $3 to $5 to $10 million check to a private equity fund, I would put our fund against those funds any day of the week. But our minimums are only $1,000 or $100,000 rather. So hopefully we'll get those dates by next week. But if you do want to reserve your spot, I think we have 10 spots for the day, dinner, lunch, kind of afternoon one, and 10 spots for the evening one for those individuals that work. Again, we're right across from the mall, and we'd love to have you. So 630-492-1912, 630-492-1912. But I want to thank everybody again for listening. Do me a favor, if you find any value in the radio show, you do know that we podcast, send the link on to someone else. We love, the time that we've been on the radio here, 5 years now or something like that in Chicago. We've built what I like to think to be a pretty big presence, a pretty big differentiation of us and other radio shows. We hear it all the time. And again, we're just here to educate. We're here to help. So if we can do that, give us a call, 630-492-1912, 630-492-1912. More next week.
This recording is for informational purposes only and should not be considered investment advice. Kuhn Capital Partners does not provide legal, accounting, or tax advice. Any statement regarding such matters is explanatory and may not be relied upon as definitive advice. Opinions expressed are current as of the date of this recording, and such opinions are subject to change. The views and opinions of guests on this program are not necessarily those of Kuhn Capital Partners. Any reference to guarantees, principal or income, protection, buffers, or defined outcome investments are generally structured notes or fixed insurance products backed by the claims-paying ability of the offering company and are not insured by any government agency. Kuhn Capital Partners is not affiliated with any guest unless otherwise stated and does not guarantee the accuracy or the completeness of any data presented. Kuhn Capital Partners and its affiliates are not responsible for any trading decisions, damages, or other losses resulting from or related to the information, data analysis, or opinions in this recording. Past performance is not a guarantee of future results. All investments are subject to investment risk, including but not limited to the potential loss of principal. Advisory services are offered through Kuhn Capital Partners, LLC, a registered investment advisor.